Hi, everyone. Welcome to another episode of the LATAM Stocks Podcast. I'm your host, Patrick Flood. Today I'm speaking with Eraldo de Paola. Eraldo is a partner and the CIO of L&S Investment Advisors, as well as Plural Advisors. He specializes in working with international Brazilian clients, and I think that's a really interesting place to sit in the LATAM markets, living in South Florida and working with Brazilian clients. So I think he's going to bring a really unique perspective and I'm excited for this conversation. So right into it. Let's go. Hi, Eraldo. How are you?
Hey Patrick, I'm good and you?
Good, good. I'm really eager to talk to you today. So before
Thank
we
you.
get into, what you do at LNS and your market views, can you tell me a little more about yourself? Where you're from?
Sure. I'm originally from Rio and I moved to Miami in 2000, at the end of 2013. Before moving to Miami, I was studying at a university in Brazil called INSPER, former IBMEC. It's a very good finance slash economics college, but I ended up finishing my graduation here in South Florida at FIU. I had an opportunity to come here for a couple months back in at the end of 2013. And then, I met someone who knew someone, etc. I ended up getting a good job interview to start working for one of the oldest Brazilian family offices based here in Miami. And then by 2015, I met with my partner, Leandro Russell. He's a known person in the Twitter for, those who like to follow what's going on in the politics of Brazil. He's one of the top profiles right now. Leandro Russell, and then we founded our advisory back then in 2016. But a year before, he had already this idea of starting to open the first educational company for Brazilians willing to invest in the US. So I was working for this family office, and I ended up, presenting each other. And we opened the advisory and we migrated the educational company here to the family office. It became like a joint venture. And that's how I started. I was 24, 25 years old. Now I'm 33. So, so I've always been in the front lines of the, boundaries between Brazil and the US regarding investments, but I'm in the opposite hand of your usual, podcast invitees here because I'm mostly speaking with people that are outside of the US and willing to invest in the US coming from Latin America. We have clients in Brazil, we have clients in Mexico, we have Brazilians that live in the whole world as clients. We have Brazilians living in China, in Thailand and other places in the Middle East, in Europe, in Portugal. A bunch of Brazilians now migrated to Portugal. So we follow closely what's going on in Brazil because we have to be aware of what's going on there to speak with our clients, but we also follow closely and we're specialized in discussing what's going on here in the US for this public. So my background, I'm more into top-down macro analysis. I have a little public in the Twitter that follows me for that. And I have been able to develop some, macro systems with cross asset class correlations and trying to understand how each asset class behaves during the different points of the economic cycle and trying to match that for my clients when they want to invest here in the US. So, we have to understand the client's profile, their objective, and trying to understand which point of the cycle we are and how the asset classes may behave during this point and moving forward to the next point. And it has been a tough job for the last 18 months, what's going on here. But I think today I'm very happy to talk about, my country and how we see the economy down there. So it's a pleasure. And thank you very much for the invitation. I've been in the markets for 9, 10 years.
Awesome. No, I think that's such an interesting place to look at the markets because you see a part of the average, Brazilian or Mexican's portfolio that the domestic market misses, right? They don't really know what they're diversifying in internationally. So I guess what are you seeing from your Brazilian clients? Are they more or less interested in investing abroad than they were, say, 2 years ago?
So I would say when we started working with this back in 2014, 15, only very wealthy Brazilians would have their money outside of Brazil. And what we've seen in the last 8 years, especially in the last 4 years, it's just amazing how many middle class, lower middle class, upper middle class people in Brazil were able to find interesting solutions to invest outside of Brazil. It became such a trend in Brazil that now you have even the major local, investment banks and fintechs and startups offering ways for people to invest outside. And it became such a big deal that last week the government and the legislative power approved the law to start enhancing the way they can tax how Brazilian people investments can be taxed outside of Brazil, including using offshore structures and things like that. So it became a thing. It became like one arm of the whole financial industry in Brazil. And I would say that so after the pandemic, a lot of people started to open their eyes to invest outside of Brazil, especially here in the US. I mean, either from like an equity investor point of view, if you want to be investing in the new trends and the vanguard of growth, especially, and also like some big companies that every investor dreams of having in their portfolio, especially in an emerging country, like owning like Apple, Google, Amazon, the magnificent seven. That's how they call them today. So that's how it started. But I would say that after the elections last year, it went to a higher level, either because people got more concerned with the political, and I don't want to talk about, I don't think that's the point here today, but also because of the fixed income here in the US, right? Because if you think about it, we come from a decade where you would look at local government, domestic government, a real interest rate in Brazil, it will be way, way higher than any kind of real interest rate here in the US. But since 2022, people can be, rewarded higher yield on higher credit quality. And from what I do and what I like to watch and see and stuff like that, I like to always tell my clients that even though the interest rates may be higher in Brazil, the credit quality here in the US is higher, right? So if you want to diversify a fixed income portfolio, you also need to diversify credit quality. And with, T-bills and even like longer term bonds paying north of 4.5%, 5%, at some point 5.5% in dollars, that became very attractive. So if you match that with the political situation and the uncertainties that we can, cover here, that became really attractive. So I don't know how it's going to be if by next year, this crowded opinion of rates will fall here in the US. I think they will fall, but I don't think they're like in the driver's seat, I think it's more of like a cyclical thing. But if rates start falling here, and then, I don't know how Brazilian investors will perceive that. And there's like a thing here, since the 90s, most of the wealthy clients that started to invest here in the fixed income markets always had a lot of exposure to Brazilian debt in dollars. And that's something that I think I was able to help with my partners here to change the mindset of, how this is discussed nowadays in public in Brazil. Because back in the day, these clients would come to the US, open their accounts, and the only thing they would like to invest, like Itaú bonds in dollars or Petrobras bonds in dollars. And that's something that, back in 2014, 15, we would discuss it publicly saying, hey, if you're thinking about, putting your money outside of Brazil and diversifying and, protecting yourself from the Brazil risk, why would you open an account in the US and buy, Brazilian bonds in dollars? So that's something that has also changed as the industry grew. But, I don't know if interest rates start falling here and the fiscal side of things in Brazil don't get well controlled. Maybe, the Brazilian money outside of Brazil will look back to these bonds and be like, well, I think I like the risk, but for now, I don't think the spreads are so attractive. And I think offering more of higher credit quality kind of fixed income has been a very good topic to bring to clients willing to put their money outside of the country.
Yeah, so you hit on a really interesting point there. And whenever I see like a Brazilians debating whether or not to invest abroad, the debate always centers around the exchange rate. The dollar's up, it's a good idea to invest abroad. The reai's up, why would you invest abroad? You're an idiot. But that's not really the point. So like, I'm curious, how do you talk? And I hear that the other way too. Like all the gringo investors, they go, why would I invest in Brazil? There's so much currency risk. But I'm
Right.
curious,
So
how do you talk to your clients about currency risk when you talk
that's
about investing
something,
in the
yeah.
US?
Well, I hope that, if any Brazilians out there are going to watch this podcast, and that's what I've been telling prospects and clients and, friends and partners and anyone who asks me the same question, and it's the following. Are you an FX trader? No, right? So investing outside of your country, let's say you're Brazilian and you're looking forward to put money outside of Brazil, that's the situation where I'm more used with, arguing. But this situation can be used for American investors looking to invest outside of the US, any country. So it's a philosophical decision, first of all, right? Because let's say you come from an emerging markets country, right? And as we say, 4 years in a emerging markets country, it's like 40 years in the US of political instability, right? It's like the pendulum. It goes back and forth and crazy things happen on a 6 months basis, right? So if you're a wealthy person in coming from one of these countries, it could be Brazil, it could be any other one, especially in Latin America, and you wouldn't like to have 100% of your money in your country. So you decide to put your money, a part of your capital, outside of your country to protect your assets, like to have a diversified basket, but knowing that if something happens like what happened to the Venezuelans in the last decade, and it happened with Brazil in the 90s as well. It happened with many other countries in Latin America in which, things go out of control, money devalues, inflation kicks in, political instability here and there, risks of extremely socialists trying to take on the governments and stuff like that. So if you're thinking about putting your money outside of your country, you're thinking long term. So you're not trading FX. You're not doing a carry trade. You're not trading for tomorrow, for 1 year. You're thinking about possibly leaving this money for your kids, especially if you're older. So it just doesn't make sense to me. People get so attached to things like short-term price movements, right? And that's the same with Bitcoin and gold and the stock market, right? But if you look at it from a philosophical point of view, a point of view in which you're trying to diversify your basket, trying to guarantee that part of your, wealth is outside of your country and protected within a stronger economy, a country that has more respect for laws and things like that. So what's the matter? And then there's a little joke, when local currencies in Latin America go up, they go up by climbing the stairs, but when they go down in the elevator, So from the real to go from 550 back to 490, it's like 3 months of struggle. But from it to explode from 350 to 560, it took 2 weeks, back in 2020 or the end of 2019 when it started to get really bad. It was already at 4 something, even before the pandemic. So, when it's going up, it goes up in climbing the stairs step by step. But when it goes down in the elevator. It goes super quick. So, that's the thing. It's all because of, it's not just about real interest rates differentials, for the economists watching here, but it's about the risk component, the risk variable in the equation. It's as important as the interest rates differentials and the inflation's differentials and the growth delta, or whatever model you kind of like to use. But there's also like a risk component, and sometimes it's exponential. It's like it has fat tails.
Absolutely. I completely agree that it's a philosophical decision, right? It's you're hedging long-term risks for peace of mind, not trading Forex. So you mentioned then that you're seeing a lot more interest, particularly after, the pandemic and the recent election in Brazil. So that implies philosophically more and more Brazilians are looking to hedge Brazil risk, particular political risk, I guess. Okay. So then what are some of the political risks then that you see or that your clients are conveying to you that they want to hedge? It was one of the things you mentioned before we talked that you think a lot of foreigners are missing about Brazil. So what are the political risks right now?
So before I get into that, it got more accessible. Now you can download apps in Brazil and put your money in the US markets. Back in the day, you would need to have like $1 million to be able to open an account here, and we're very proud to be part of this change. Back in 2015, 16, we were one of the first financial advisors to offer interactive brokers for clients. For example, at interactive brokers, you can open, accounts for $10, $100, So accessibility became a thing, technology, But jumping into what you have just asked me about, what are these risks? So I've done hundreds of lives, and I've been interviews with known figures for the Brazilian markets. I never bring a script with me. But here today, I'm not talking to Brazilians, I'm talking to foreign investors. And I wanted to make it more of a script thing, so then people can follow the line of thought. So first point, and I'm going to go through the first point kind of like faster, because it's from a foreigner, it's not that big of a deal. But for local Brazilians, it is. There's like a quarrel going on between the Supreme Court and the legislative power, right? It got to a situation, it's because of the last government. Like Bolsonaro, he was an outsider. He wasn't a liberal. And, you have to understand that if you're investing in emerging markets, controlling the tax revenue money from those that are in the government, side of the economy, it's where the real power is, right? So when people talk about privatizing companies, usually those that are center left and left in these emerging markets economies, they're against, because they're losing tax revenue and other types of revenues that they can control, right? So there should be power in Brazil to control some of Bolsonaro's liberal ideas, like privatizing a couple companies, started to use amendments to transform things that could be voted on the Congress, like a week before, a month before things go to be voted, they would use amendments to transform things into unconstitutional things. So basically, the Supreme Court started to legislate, right? That's how it started. And then, you had some other episodes of turmoil, protesting, and then we fall into this new, like, 1984 situation in Brazil, in which it's not of the interest for the congressmen and senate men and the Supreme Court judges that people are able to protest or, comment about political things on social media, or even like WhatsApp groups, right? So you have this kind of like Chinese style of country that Brazil is becoming. So many people were scared of Brazil becoming going towards like a Venezuelan path with Lula's re-election. I don't think that's a main reason of concern, at least for now. I think it's more like a Chinese state-controlled thing. So there's a lot of power right now in the hands of, the Supreme Court, and a lot of power in the hands of the center and left power, right? And they're going over, increasing tax revenues and trying to, scale back some companies that were privatized, like Eletrobras. They want to go back and make it public again, and, things like that. But, I don't think Brazil will become the next Venezuela, because to consolidate the power like they did in Venezuela, you need to own the political means, and you need to own the military means. And Brazil is such a big country compared to Venezuela. Like Venezuela would be the size of a state in Brazil. Yeah. And there's a lot of power in Brazil centered across different types of industries.
The economy is more diversified, right? So you have more centers of power, whereas Venezuela or even Argentina are more single cities or petro economy, right? So Brazil...
Exactly. You have a lot of power from the agriculture side of the economy in the Midwest and North region, and even South. You have a lot of power from the industrialists, Southeast and South, and you have a lot of power from the financial conglomerates too. So and each one has their own lobby, and this is very powerful in Brazil. Like these guys, many of the political discussions that are going on and change of regulation, that's the main reason why, the country will never develop fast as like other countries in Asia, for example, because if you disrupt one of these industries with a new company, they will just change the regulation, and it's like a business of either they will buy your company and you're out of the game, but you're not going to take over any industry in Brazil. It's made to be, belong to oligopolies and stuff like that. It's been like that for 500 years, and some things are not meant to change, So if the country gets too poor, and because of, some crazy socialism or something like that, there's just no money to keep the ball rolling, So I don't think that's a short-term risk, but a short-term risk, in my opinion, is this fight for power, either from the Supreme Court and from the new elected government. It's getting to a higher level, right? So there's still some opposition in Brazil, and they're trying to, how like to stop the Supreme Court with some amendments. But it's such a bad spiral, like an eternal loop, because lots of guys that are now even the like the leaders of Congress and Senate, these guys have been indicted of corruption in the past. So who can judge them? Well, the Supreme Court, right? And so who has the power to stop the Supreme Court from legislating and influencing things that they're not supposed to? Well, the Senate and the Congress. So it just will never get solved. And it's bad for productivity. Exactly. It's bad for productivity. It's bad from a legal point of view, meaning like any law can be changed. So let's say you're a foreign investor, you're trying to open a plant in Brazil, like an industrial plant. Well, you don't know if they're going to change, again, the taxation laws, the labor laws, or something like that. So these things interfere in these types of, juridical, legal things. And that just pushes away investors, locally, domestic investors. So lots of wealthy entrepreneurs in Brazil, they're looking at this whole quarrel situation, and that creates so much instability that, people just think, well, why would I risk my money here investing, trying to open a new venture or something like that? If even the past is uncertain in Brazil, if things change from day to night, and there's this whole like war going on in between who has more power, right? So it just pushes away healthy investments. It pushes away productivity. Even farmers that made a lot of money in the last 10, 15 years are starting to look at the situation and say, well, maybe it's time to start, selling farms and putting my money in dollars, pushing my money outside of Brazil, and just trying to create, like some wealth outside of the country, because I don't know where this is going to end, right? But it can be good too, depending on how it unfolds in the next years, because if the fight gets really, tough among them, that can be a sign of weakness, and that could open the door for good changes. But I wouldn't say that this is the biggest probability. So point number one, asking your question, I think it's this situation going on with the Supreme Court, right? That's a bad sign. Other countries that went through these problems, they didn't have like a good future after, But the second problem, I think this is one that affects more the point of view, that's more oriented for like a market point of view, right? I think it's the probability of uncontrolled fiscal expenses ahead. The current party, every time they had power, and every state that they had power, these guys, they've always had problems to respect fiscal expenses. Not because they like to spend money in infrastructure, but because, controlling tax revenue and spending tax money, it's how you sustain your place in power, especially in a country like Brazil, right? So right now, raising fiscal expenses and raising taxes will make a lot of money flow through the webs of ministries and industries, and will probably benefit financially, people that are in these networkings and, powerful people that are inside this type of structure, So, spending more money and raising more money for the point of view of, foreign investors is good, right? Like the country has higher tax revenue, and the and the fiscal expenses are still kind of under control, because these things take a little more time to go out of control. So in the beginning, it seems like something positive, right? But I don't think the way the money is being taxed and the way the money is going to be invested is oriented to productivity. You understand my point here? It's not like, oh, look at this niche here in the economy, let's develop more railroads or whatever to make things flow. No, if you want to develop a railroad because you have a farm, well, good luck trying to get interest from the government. Might as well try to do it yourself, right? I think I saw one of your episodes where a guy was actually talking exactly about it.
Oh, Pedro the
But
NECA.
now we're falling into a different problem too for the future, Patrick, because the country now has an older demographic pyramid. So Brazil has a similar demographic pyramid like the US. The country is already indebted. It has always had a problem of low productivity because of anti-business laws, especially on labor side, right? Bureaucratic issues, that's a Portuguese heritage that Brazil has. So if this new fiscal cycle goes in the same direction as it has been historically when the same parties were in power, I think the margin that will be left to scale it back for a better situation will be too small, because now, especially after what happened last month for the services industry, for example, Brazil is a poor country that will have one of the highest taxes in the world. So we're talking about old people, high levels of debt, low productivity, bureaucracy, bad laws for those who want to invest, and high taxes. So, if things go wrong, how can you try to make it better in a country where discussing cutting taxes is like a capital sin for those in power?
So
Like I was talking about.
let's clarify a little bit that last month what you're talking about is that Brazil officially passed a raise to the sales tax, which would make Brazil have the highest sales tax of anywhere in the world. Is that correct?
That's correct. And not only that, they're changing the way people will pay their taxes. So they're starting next year to add increments of 1%. And most importantly, and that's what we were discussing before, right? They're creating a fourth branch of the government, unofficial fourth branch of the government. For me, that's the biggest issue. And it's going to take 3 or 4 years probably for investors to realize how unproductive this is. But starting next year, who's going to define which municipalities, which states, which government branches will receive the distribution of money coming from taxation, from revenues, right? From tax revenues? Well, let me break the news. It's going to be decided by a group of people in Brasilia, So let me be clear. Other countries that try to create a branch of the government where just a few people decide where the money is going to flow to after it's, received by the government, did not have a good path ahead after this change was made. And that's what happened in Brazil, right? So not only the highest service tax in the world, the IVA, but also creating this fourth branch. Of course, they're not going to say it's an official fourth branch, but, informally, people here are saying, it's the parliament, So if you look at the historical cases of corruption and other things, not only in Brazil, but in other countries from Latin America, giving this amount of power to a group of people doesn't seem like a good idea. And well, it's been approved. So, but talking about short term, there's nothing going on that would concern me. Like Brazil has been having good export numbers. According to Morgan Stanley, a study by Morgan Stanley that I've read a couple weeks ago, it says that Brazil is more influenced by Chinese investments than Chinese demand, differently from like, I don't know, South Korea or Indonesia, for example. And, Chinese economy is not doing so well right now, but they have been investing for industries there. The industrial side of their economy has been actually receiving investments from the government. So that's also like positive for Brazil, talking about like a macro perspective and how things can get connected. So for the short term, I think it's all right, but it's just complicated for the intermediary kind of window, which is 2, 3, 4 years from now. I think this fiscal side of the government and how they control that is just go out of control. And then lastly, I would finalize this important part of the podcast mentioning the central bank independence. So I would argue that this was one of the biggest wins of the last government, giving the central bank independence. And because, back in the day, the government would influence the central bank to reduce rates. And that's the same sad story for every Latin American economy that has problems. It's because of, government influencing things such as reserve control and interest rates control. So Bolsonaro and his government, I think that they did a very good job for the future by giving the central bank independence. However, I think this independence may die slowly. There has already been a lot of pressure on current central bank president, Roberto Campos Neto, and he's been elected by the legislative power. And he has 4 years mandate, right? And this creates more stability, less populism, and just like Fed and Congress here in the US, right? But for the next 3 years, the current government will be able to switch 10 I think out of 11 directors, they'll be able to change 10 directors. So basically, they will just put the elected president of the central bank surrounded by people that were finger pointed by people from the Socialist Party to go back to the old ways of using the central bank for, populism and things like that. And that's how it is. They already started picking names and guys that are aligned with their interest, and you see some senators and some Congress people aligned with the current government, making a lot of complaints about how high the interest rates are in Brazil and how it hurts the economy. But that's the problem that they created in the beginning of 2010, and that's why Brazil had a really bad recession in 2016 when the rest of the world was doing well. So the government wants to reduce rates, and this can be a potential risk for foreign investors, because if they force the situation and they don't have control on the fiscal side of the economy, then we're talking about currency devaluation, especially for a country that imports a lot of goods. And so a devalued currency and a fiscal deficit out of control will just attract inflation, because, Brazilians import items more than they export, with the exception of agricultural items, right? So even toothpaste is imported in Brazil. So that just creates more inflation. It's completely different than the situation here, I would say, in the US. But for the short term, what is the government trying to do? What they did in 2002, what they did in 2006, what they did in 2010. And it worked in the beginning. It's that typical, expand credit, show growth, GDP will go up because they're spending money. They're giving people credit to, for consumption. And the GDP in Brazil is very similar to here in the US, which like 2/3 of the GDP is based on consumption. So giving people credit, making the government spend money. In the short term, it's a bonanza, right? You will see Brazil growing at rates that no other countries in the same region are probably going to grow, with the exception of Guyana, which is a very interesting situation going on right now. And then, that's how the current government thinks. But within time, the bill will come, like you can't do that in the short term thinking that it's going to work for many, many years. And those are things that will raise the GDP in the short term, but will put the country in a bad situation for the long term again. So history doesn't repeat itself, but it tends to rhyme. So just to summarize for those that are watching, I think that's the most important part that I had written here. You have lack of faith in the Supreme Court and legislative powers. You have a setup that is perfect for the current government to control tax revenues and spend it however they want it for their own purposes. And within a couple of years, you also have a setup to push the central bank back to populism, right? So this is not a good recipe. And the country is now with an older demographic pyramid and, already has higher levels of debt, already has a lot of expense, and then the constitution in Brazil says that everything should be guaranteed by the government, but it doesn't say how. It's different here than the US, where there's no money in the budget, everything stops, and that's it. In Brazil, it never stops. So those are genuine concerns by clients of mine when they look at the situation in Brazil and they're thinking about sending their money outside of Brazil. So Why would you outside of Brazil be looking to invest in Brazil? Well, if it's for the short term to clip real interest rate, good coupons, or opportunities for, short-term cycles, good. But for the long run, it's tricky. And you got to start paying attention to all of those things that I've been mentioning, because that's what we're paying attention right now in local discussions, domestic discussions.
So here's a question I have about the political risk when we have this discussion in Brazil. Like all the things you described are concerning, for sure. But PT and Lula were known entities, right? Like they've done this stuff before, and what you're describing sounds exactly like what you expect from a former, Marxist guerrilla or whatever, a union leader, socialist government, right? Of course they were going to go after the central bank. Of course they were going to raise taxes. Of course they were going to try and take the private companies public and control them again. But it seems to me that, you talked about like the expansion of other interests in Brazil, right? Like the agro lobby is bigger now than it was in 2008 when Lula was in power.
Right.
So does PT still have the same political power they had compared to the last time they were in control? Like, are they still, because the last time when I remember 2008, they got whatever they wanted, they pretty much got done. But it seems to me, especially culturally, like there's a lot more pushback. Like,
no, they don't.
A lot more. Okay. So
it's not about PT, it's about the center, That's how we say it's the eternal purgatory, Like who owns Brazil is the center, like those parties like PMDB, for example, or PSDB. These guys, they have the real power. Like if PT doesn't have a lot of power, if the economy gets bad and they try to move the country towards like a Venezuelan path, right?
They're done.
They will come across a way to impeach them. But at the same time, these same guys, they want to have control of, tax revenue, fiscal expenses. It's the center. PT is just part of their interests right now. But PT will go out of power tomorrow. Someone else will come in. But this group never goes out of power. And my concern is, the way things are, it's everything that I have just described is part of their interest too. So controlling this fourth branch of, how the taxes will be distributed, it's not going to be a PT thing. It's going to be like a center plus PT thing. They're playing together now because that they had to come around and be friends again to be able to put Bolsonaro and these other conservatives right out of power. So right now they're going through a momentum, but eventually interests will change. And the center always wins, and the center will always keep pursuing the eternal purgatory. It can't be too developed because they lose their power, but it can't be too poor because then they don't have enough money to control and they don't have the same amount of power that they want to. And I'm saying power here because I don't want to talk about, corruption, but that's how the country is run since the 80s.
It sounds like what you're calling the center in Brazil is what Americans have been calling the swamp in
totally.
the US.
Yeah, the establishment, correct.
Yeah, the establishment. So I guess then, if I understand, then the real risk isn't necessarily PT implementing, their Marxist utopia policies.
No,
the center can make institutional changes, and then if public favorability against PT is negative, they can swing center right and still control things the same way under a conservative government.
Exactly. All of those changes that I've mentioned before, it works for the establishment appetite. They're just using PT as the current variable in their equation. But if they need to change their variable, they will pick another variable. But all of these changes that I said, they're inherently important for the future. No matter if it's, listen, I don't care if it's PT or Bolsonaro. From Monday to Friday, businesses are open, people are working, and the days have 24 hours the same. But I care when, they're raising taxes and they're spending money, they're expanding credit, they're creating a fourth branch to control all of that. They're trying to finish with the central bank independence. And, the country is already the country has more older people than younger people. The country has low productivity, huge bureaucracy. So those are things that I care. I'm not here to say, oh, too bad Lula won the election and Bolsonaro lost. I mean, we're not here to discuss that. We're here to discuss, okay, this happened and power switched hands. But even though power switched hands, those are things that are coming to stay. And those are things that should make investors concerned. And I think those are the main points. But if you look from a fundamental perspective, one can always find a case to be looking at Brazil. There are actually like lots of opportunities on a micro, like bottom up kind of view, like from a macro perspective, up until like 2 weeks ago, I think, or 3 weeks ago, last time I checked it in November, okay, equities were trading 2 standard deviations below their 10-year average price earnings. And we're getting to a point in which the central bank is about to, enhance the rate, reducing rates. It's like a new cycle of cutting the rates. And not only because of pressure from the government, that makes sense too, but these guys that are still in power of the central bank, those guys are market, economists and market guys and data scientists. So they know what they're doing. So we're talking about 2 standard deviations below the 10-year average price earnings right before the beginning of a rate cut cycle. So we're talking about, possible multiple expansion. But, I don't get too excited with that because first, I'm in the opposite hand, right? Like people want to invest outside of Brazil. They come and I speak with them to help them invest here in the US. And I think that's the same story for other countries like Mexico. And, it's not a Brazil opportunity. It's an opportunity for other like emerging markets. And, if I have to have exposure to emerging markets because of these other like longer, like intermediary term risks that I was discussing, I'll be looking at different jurisdictions like Indonesia, and other cool places. But if you want to have like a more positive view on Brazil, I would say, well, REITs have been depleted in the last couple of years, so you might have cool REITs to look at. People are still consuming even after Lojas Americanas went bankrupt, and credit for these things is getting a little tight. So, but I think I spoke too much. I'll let you move forward with
No, you're right. The Bovespa, and then if you look at small caps too in Brazil relative to Bovespa, they're even more below their historic.
WZS ETF, you mean, right?
Yeah, the SMLL, I think. Yeah, compared to the Bovespa, I think it's trading where it was like a 12-year low at its lowest point. So, yeah, you're right. There's always an economy as big and diversified as Brazil. I think there's always opportunities to make money.
Yeah, and the economic activity for 2023 has been surprisingly stronger than anticipated. Like the consensus was 0.5% GDP growth in the beginning of the year. And we're talking about like 2.9% projection for the whole year and then another 1.4 for next year. So, but I think the fiscal target is going to be the main challenge next year. And if you ask me, how can they screw up all of this current optimism with Brazil, it's going to be on the fiscal side of it, man.
Absolutely.
Or maybe, the crops like that they export will lose value, international prices of agricultural things will fall and the account surplus will reduce and they will have less money, and things like that. But it's
always, yeah. So you mentioned Indonesia, but are there any other Latin American markets that maybe you're constructive on that you think are compelling at the moment or anything you're watching?
From a cyclical point of view, which is what I like to do here when I analyze the markets, I'm not very optimistic with emerging markets as an allocation right now in general, right? Like some people would bet that we're in the beginning of a new expansion part of the cycle next year. I mean, saying like, the toughest part is gone. Like we've been through the tough part during 2022, 2023, and now 2024, the whole like global economy will move back for more of like global expansion. Everybody's too pessimistic, and especially with China. So if you're in this boat using like, that's my mindset here, if my line of thought, right? If you're betting that, the global economy will start to grow again, then I would move at emerging markets that can benefit of it, right? Such as like South Korea. So I think South Korea could be a good bet for this assumption, right, for this hypothesis. But I'm more in the other side. I think we're actually going to start to see the effects of this whole rate hikes from last year. I think we'll start to see some cracks in the credit markets, especially here in the US, and mostly I would say in Europe. And I think the situation in China, which is a black box, is tough to see, but I don't think it's that under control. So I'm not very excited with global growth. So that's why I'm not very excited with emerging markets. I think emerging markets is a good asset class to play when we're talking about like global growth. It's a team, like a global recovery. It's an amazing performance. It's an amazing behavior that you get when you have a global recovery and the dollar index is falling and commodities are going down and the earnings of, the US stock markets are still priced too high and they're not going to be that high. So the market's kind of like flat. And then you will find great opportunity in emerging markets like Latin American, Southeast Asian stock markets for growth and stuff like that, commodities, energy. I don't think we're going to this stage of the cycle. I can be wrong, but if I wouldn't be allocating in emerging markets for this specific reason. Okay. But if I have to pick one, I would say Indonesia. I think Indonesia is a very cool one because they're doing a lot of things to move the population concentration outside of Jakarta, to other regions of the country. And that reminds me of the economic history of Brazil in the 70s. That's when the country grew a lot. I think for Mexico, for example, I think they're spending too much money with infrastructure that doesn't make a lot of sense. So I think Mexico will make the same mistake as Brazil did in the 80s, which is investing too much money in infrastructure and then you just can't carry these costs in the future. And Argentina, honestly, I don't think I like to see how Milei is doing,
Yeah.
But I don't think he will have power to control many things because he doesn't have the majority in the Congress nor Senate. So it's Latin America, man. It's not that easy to cut government expenses. You have millions of people that, just suck money out of the government's, breasts for 50 years, 100 years. And some things are just tough to control, right?
The Argentina story is amazing. I mean, I never thought. I travel there all the time and I follow their currency. And I think the first time I went to Argentina, it was 16 to 1. And now for the dollar, and now it's, 1,000, 1,200. It's been wild. But just the coverage, I never in a million years would have guessed that global coverage of an Argentinian election, like that Tucker Carlson interview got 400 million impressions or something, which is just insane. I mean, it really is. He's a global phenomenon, which is
Dude,
strange.
it's crazy because he's the first liberal, but I'm not liberal in the American sense of liberal, like liberal in the traditional economic sense of like a liberal economist, like
Free
kind of
markets,
like
free markets, right? Yeah.
Exactly. So he's the first like anarcho liberal, kind of like, guy who becomes a president. So for these guys, like the Mises Institute, for example, it's like the walls of Berlin have.
He's like their Wayne Gretzky, right? Like he's like they're
Like the walls of Berlin have like fall apart now. Like okay, if we put Milei there, we can put other guys in other countries, but it's just. I think it's more like a context thing. It's more like a coincidental thing because the situation the country is, it's a good country. I'll tell you, like even with this whole economic destruction, the average Argentinian has higher education than the average of any other country in South America, and as well as violence. It has less violence than Brazil, and the country is like in the ashes, right? It's destroyed, and it has less violence than Brazil. So it's a good country. It's a pity what these politicians did with this country in the last, 40 years, because it could be one of the richest countries easily in the world. When I was a kid, Argentina was way better than Brazil. Brazilians that would move to Argentina, like, oh, this guy is working for Microsoft. So now he's getting transferred to Microsoft's headquarters in Buenos Aires, and then back in the 2000s, it all went from Buenos Aires to São Paulo, and that's when Brazil had its opportunity to grow. But now I think, the pendulum is like switching, but still, He doesn't have the majority in the Congress. He doesn't have the majority in the Senate. And it's just tough to change like social, cultural things. And it's a mafia, man.
That's what
I'm
I
surprised
think.
they didn't try to kill him yet, you know.
Well, yeah. But I think you just hit on a point too that Americans have a really hard time understanding when you explain like how ingrained culture like 50 years of socialism is. It's like
Mhm.
people, you know what I mean? Like that doesn't go away overnight. And like even like hyperinflation is the same thing in Brazil.
Yep.
Like people still allocate their portfolios based on a hyperinflationary history in Brazil 30 years later.
That's a traumatic episode that happened in the beginning of the 90s. And I would say that the Brazilian banking system is one of the fastest banking systems in the world for transferring money because of what happened in the 90s.
People cite the risk-free rate is the overnight rate in Brazil. It's still the
Yeah,
Selic is an overnight rate, which
it's an
is
overnight rate,
people
correct?
talk about the 2 year and the 5 year in the US and Brazil. No, it's the one day.
Imagine in Argentina right now. So
But, yeah,
it's the
but
same. And I'm kind of pessimistic with Colombia. I've been following a couple corporate debt and government debt, and I think Colombia is getting kind of like spending too much money. So that was a country that in the last couple of years had a kind of like interesting economic situation, exporting, oil and having like a controlled deficit. It's getting out of control. So, and Chile is like a global story, right? Like it's a copper kind of like story. So Dr. Copper, the
yeah,
cannery in the coal mine for the global economy. So Chile, even though it had a couple of changes, major changes actually on its constitution and the way the
they
country
never.
works,
Yeah.
but
Well, did they pass a new constitution? Or are they still in the process of drafting and voting? Because I think that's a story that doesn't get covered at all. That Chile just abolished its
they
constitution like
passed.
3
No,
years
they
ago.
passed. They
They have
passed
a
a
new
couple months
constitution.
ago. Yeah.
Okay.
And Chile was such a rich country in all aspects, like good education, and now it's Chile's turn to go down the socialistic avenue,
We'll
and
It was
the
shocking,
way
like
it is.
a couple of years ago when they were burning down metro stations in Santiago. You wouldn't have seen that coming.
Burning down churches too. It's very sad, man.
Yeah.
And Uruguay is getting a lot of people migrating to Uruguay because Uruguay is becoming like a little Switzerland in South America. So a lot of Argentinians migrated to Uruguay.
Yep.
And now a lot of Brazilians are starting to migrate to Uruguay, especially now that they're going to tax the offshores. So if you're Brazilian, you migrate to Uruguay, you leave Brazil, it's still close from home, you can visit your family, but then you can owe your money in dollars outside of Latin America. Your money is in the US under an offshore company. You don't pay any taxes. You live in Uruguay basically tax free. It's a
Yep.
pretty nice country, man. I mean,
I love
uh,
Uruguay. You appreciate it
yeah,
quiet. It's
nice
the best kept
wine.
secret.
Yeah,
Yeah,
exactly. The
and
best.
Montevideo is sleepy, but hey, there's a beach in the city. Like if you're staying in Positos,
And
and
Punta del Este is such an amazing like Riviera. So
beautiful. And then
it's
even
kind
some
of
of the
cold for
Atlantic
me,
beach.
but I like it.
Hey man, if zero tax and safe, secure. I mean, such an impressive country. The first time I went, they have 3 million people, and they
Yeah,
produce enough food to feed 60 million a year. So
yeah.
you want to talk about a useful people? Like
No,
what a
it's 3
useful little
million
country.
people, and
Yeah,
they also have a good soccer, like an international soccer team. They
right.
fight, they play like, Brazil has 220 million people. Argentina has like, I don't know, 40, 50 million people. Uruguay has 3 million people. But if Brazil's playing against Uruguay or Argentina is playing against Uruguay, they play the same level of soccer, it's
They
such
punch
small.
they punch way above their weight in a lot of aspects. It's a really
But
impressive place.
there's no way to invest in Uruguay unless you hop on a plane and go there,
I
buy
I no, I
real.
covered it. I covered it when I was there. I was there in March this year. So
Yeah.
I went through their equity market and there's like 19 stocks and like
Yeah,
I ended up covering the bus terminal just to cover a company because it's public, but it doesn't
right.
trade.
Yeah, I think the best way to invest there is like owning land
A
there,
farm.
probably.
Yeah. But
Yeah,
it's
farm.
expensive. It's expensive. I've
Yeah.
looked at it, but
No,
it's
but
really
I would say in the
sophisticated.
cities, like really like apartments, renting out apartments, I would say, because with migration coming from Brazil, I already have clients of mine here in my advisory that are moving there, especially because in southern Brazil have a lot of wealthy people there,
Yeah.
Santa Catarina, Rio Grande do Sul, all of these states, and these are people interested in moving to Uruguay.
Well, let me ask you then about that because that's a really interesting point too that maybe you have an answer for. But there's this chart that went viral, and I've reposted it, and people engage with it. And it shows how much of every 100 reais a state sends to the federal government in Brazil, how much they end up getting back. So for
Yeah,
every 100 reais that like Santa Catarina sends, they get 13 back.
yeah,
And then in the north and the northeast, they're getting like 200, which
yeah.
means it's just clearly showing that the southeast and Sao Paulo region of Brazil
Yeah,
are
they sustain the
subsidizing the
rest of the
north.
country.
They
Yeah,
subsidize the north.
yeah,
So
and
how
not
does
only
that
that.
work long term? Like why hasn't the South just what keeps the union together, I guess? Because there's a secessionist movement. The same way people joke in
Well,
the US, Texas should
okay,
leave.
the real explanation, and now it has nothing to do with the markets, but it's very interesting, and I think people watching this will Google that after I say, but Brazil is the only country that that was capital of a European empire. Okay, so why didn't Portuguese America got divided into many countries like Spanish America, right? Because South America was split into by Portuguese and Spanish, like the Tordesillas Treaty, right? Well, because during Napoleon Wars, the King of Portugal moved with the whole nobility, Portuguese nobility. Is that the right word in English, right? The
Yeah,
nobles, like
nobility. Yeah, Portuguese nobility.
they moved out of Lisbon to Rio, and they made Rio the capital of the Portuguese Empire, which was the second biggest empire of the world. So you had the figure of the king, right? So that the king left back to Portugal after Napoleon was, lost the war, and he left his son, and he was the emperor of Brazil. Back in the 1800s, Brazil was the richest country in the whole of American continent, right? The emperor spoke 8 languages. We were already in the bond market getting financed by the British to develop railroads. We had the highest level of literacy in the Americas and all of that. So the figure of the emperor is what kept the country together. And you had a common figure, the emperor of Brazil. So certain regions of Brazil throughout history tried to get independent of the country. The only one that was able to was Uruguay,
Mm-hmm.
So Uruguay used to be a part of Brazil, and then it became a part of Argentina. And
And
then
then didn't they
the
just kind of let
British
it go as like a buffer?
yeah, the British
Or-
got in the middle and said, okay, it belongs to nobody, right?
So then why today have these movements not picked up? Because the emperor, it seems that Lula is not a very popular emperor.
No, I'm talking
right? And neither was
from a
Bolsonaro.
historical
Yeah.
point of view, because that's the way things are. And especially because in the last 50 years, a lot of states were created with the single purpose of having more seats in Congress. So you have regions in Brazil in which back in the 70s were just one state, like the state of, let's say, Tocantins, which is a state with, I don't know, the whole population of Tocantins is 1 million people, right? It's in the middle of Brazil. This state was together with the state of, Pará or Goiás, I don't remember. But so you had less seats in Congress. So it's not like here in the US where you have every X amount of years, certain states have more seats in Congress and in the Senate, and other states have less seats. No, in Brazil it's the same. And that's very unfair because that's how the center and that's how the political power works. If you see, like, who's the leader of PT in the Congress? It's a guy from the state of Amapá, which is a state that didn't even exist until 40 years ago. So they created these new states to have more politicians sitting in Brasilia. So the biggest sin in Brazilian history is pushing the capital outside of Rio and putting it in Brazil in the middle of the Midwest where there's not enough population to put pressure in the politicians and putting all of the power in the federal hands, not in local hands. So here in America, okay, you have federal constitution, but Florida has its own laws, and Georgia and California and New York. And you know what? If people don't like the way things are in California, they can move to Texas, right? In Brazil, it doesn't go this way. It's federal. Everything is decided by bureaucrats in Brasilia, 4,000 kilometers away from Rio or São Paulo or other areas. So, and that's how these bureaucrats sustain power and control the country. That's how it works. So all of these states that produce only deficit, they receive money from the states that actually produce something for the country to keep the political machine working in Brasilia. And that's how it works. And when people say here in America, like, oh, we should change the elections to whoever has more votes, I'm like, dude, don't do that. This is going to be the biggest mistake in the history of America. You know, having the elections the federal elections the way they are here, with each state being represented in DC, and each state carrying its own votes, is the smartest and the most efficient way of a country to work. If you do that, if you do the opposite of that, you're going to create incentives to have the same problem as we have in Brazil. You know,
in the U.S., California would just be ruling the country, right? They have the most population, it would be their policies everywhere.
And they would split California in three and have, like, you know, more
yeah.
stuff like that.
This was a fascinating conversation. I think we covered a lot. Is there anything we didn't talk about that you think maybe we should leave off with?
I mean, from a global investor perspective, I would say right now we're dealing with overexcited markets because the interest rates went up a lot and now they're coming back down. But I would open everyone's eyes to, you know, maybe a way more challenging 2024 and 2025 than we're expecting right now. You know, it's almost Christmas time and everybody's super excited and things like that, you know. So I would say we have to be very aware of, you know, risks of a recession here in the US. You know, what kept the economy away from a recession? I think it was services consumption. And now we just have the end of the CARES Act forbearance. So Gen Z and millennials that weren't paying their student loans and people that weren't paying their mortgages now have to pay. We have a lot of commercial real estate debt. We have smaller banks getting loaded up with broker deposits. You know, Patrick, there's a lot of unknown variables for next year. And just like we entered 2023 very pessimistic, and, you know, it wasn't that bad, now we're going to enter 2024 very optimistic. And the markets, they like to play with the investors in mind and in things like that. So there's like a huge maturity wall for corporate debt, especially high yield, for the next 12 to 18 months. We're talking about more than $1 trillion of debt maturing. If the economy is not that bad and the rates keep that high, how are these companies going to be able to roll their debt? How are the smaller regional banks be able to roll these commercial real estate debts that they have when they already have a deposits problem? So right now we're still in that stage in which the money that is in the reverse repo is still there. And as this money gets drained, everything will seem to be fine. But when the reverse repo money drains, I think bank reserves will start to get tight, credit will deteriorate, unemployment and all of these other things have higher chance of getting worse because it takes on average from 1.5 to 2.5 years to check the effects of monetary policy on unemployment. So now we're going to start to see these effects. So I think in general, not only for emerging markets, for general markets, it's a good time to be very skeptic of any optimism and be on the T-bill and chill kind of like, you know, watching it from outside than being too much deep in the markets, you know, and following liquidity very closely.
Well, it's not just the corporates that have a maturity wall too, right? The Fed has to roll over, I think, 7 or 8 trillion that has a blended rate of like, I don't know, 2.5%. And they're going to have to roll it over at higher interest rates, right? So like, what's that going to do to the federal deficit and the Fed balance sheet, right? So it'll be interesting to see, because I hear you on the actual like underlying economic activity, but if they just print a ton of money to fill that gap on the interest payment, I mean, the last time they did that for pandemic, it was risk on, right? You saw GameStop and
but I don't think, I don't know. I think this is less concerning than a credit crisis for banks and regional banks and things like that, because this is a problem that will get solved by itself. If a credit crisis starts, they will reduce the interest rates and be able to roll all of these T-bills that will mature next year at a lower rate. So not a big deal. I don't know. I just think the markets are too greedy right now, thinking it's over. The tough part is over. I don't know, man. I think we're still going to see next bad episodes of this endless cycle that we're in after the pandemic. It's just an endless cycle. It gets better, it gets worse. I think we're going to a recession, and then we think we're going to an expansion. But I think when the situation is like that, that's the perfect environment for black swans and things that are out of our radars to happen, like insurance companies, pension funds. We have to be aware of these other variables, other items, other themes that are outside of the daily discussions. But next year is an election year, so let's see how it is. Government likes to spend money during election year.
It's going to be a crazy year. I definitely think it's going to be an inflection point for the U.S. market. I think something is going to have to give, and we're not going to be sitting here just.
I'm more concerned with Europe right now. I think Europe is the one with the most fragile situation. So
don't get me started on to Europe and the airlines. Like I have nothing good to say.
I've had trouble there too. Man, I had trouble with Iberia a year and a half ago. I went from Florence to Madrid, and basically no one's bag was brought in the plane. So people were waiting for the
Florence.
Nobody's bag.
Florence has to be one of the worst airports I've ever been to. It's too small. It's like this amazing tourist city. They get tourists from all over the world to the most amazing.
Don't fly from Florence.
And their landing strips like this big. And if it gets a little windy, they cancel all the flights for the day. It's unbelievable.
Thank you so much for the invitation. I'm sorry for any wrong words or heavy accent.
This was
here
amazing.
In Miami, we speak a lot of Portuguese here in the office and with the clients. So even though I've been in the US for 10 years, I wish I could speak English better with a better accent.
No. I don't like you speak perfect English. Relax.
Thank you very much.
I'll link your Twitter in the show notes. Where else can people find you? Anything else you want me to point them towards?
Well, usually I have an Instagram profile. I haven't checked there for years. I'm more like a Twitter guy. I just have my Instagram there in case, I lose my Twitter account for any reason. But you can find me on Twitter. Most of my posts are in Portuguese, and most of my posts are about macro and cyclical asset class behavior during different points of the cycle, or about, quarrels going on in Brazil, Supreme Court or legislative power or political things. So if you follow me and you translate my posts, you will see when I'm talking about the US economy and cyclical reading, or when I'm talking about, Lula and all of that. And if I get enough, English speakers as followers, I'll start to post more in English too. But nowadays, 99% of my followers are Portuguese speakers. But yeah, I would love to start talking more about Brazil for the American public, especially on these political things. I think it's not widely followed, but we're in a very similar scenario that we're here in the US, where the population is divided and there's a lot of animosity and stuff like that. So for those who like to follow these types of events, Brazil is a full dish, man. You can get daily news about what's going on, So Patrick knows what I'm talking about. So
yeah. You can get all the same propaganda in Portuguese if you want it, right? Like you can get the daily dose. Thank you so much for doing this, man.
Thank you, man. Thank you.